Office Space Solutions, that is the stock on our radar. The management is joining us now. Amit Ramani, the chairman and MD of the company, with us today. And we'll discuss with the management the potential from new innovation hub in Bengaluru, the expansion that they did in Mumbai recently, potential from first gold center in Pune, and seat addition targets for FY26 as well. Amit, good morning. Thank you so much for joining in. There have been a lot of updates actually recently, but let's talk about the most recent one, which is the Mumbai office. You've expanded here. There is Howden that has taken some of that area on lease as well. 50,000 square feet, which is in Supreme Business Park, Powai. Give us a sense of what does it take your total area in Mumbai to, and out of that 50,000, how much is taken by Howden? What is the occupancy scenario for the rest of it? And what is the current occupancy in Mumbai overall?
Really glad to be here and glad to report that with that expansion of the 50,000 square feet, our total portfolio in Mumbai has crossed about 1 million square feet, right? And this is across 34 locations. So we pretty much cover everything from South Bombay till Thane Belapur Road, and literally have a center in almost a 15-minute driving radius in a city as complicated as Mumbai within that driving radius today for us. Also, in terms of your other part of the question, Howden has taken almost about 65% of that space. So out of the 50,000, almost 36,000 has been taken by Howden. And this continues our partnership and expansion with a lot of GCC clients. In the last, I would say, in the last 6 months, we have signed 11 new GCCs in India, of which Howden is one of them. And so this continues our expansion in Mumbai and many other cities as well.
Amit, good morning. Thank you for joining in. What about Bengaluru, the innovation hub that you have launched there? Two-part question actually. Is it completely occupied by eBay first? And two, generally, what is the timeline for such centers to break even if you have one for Bengaluru as well?
Yeah, so in case of, I'll first answer the eBay part of the question. In case of that innovation hub, the eBay has taken all of the 67,000 square feet that we have signed up in Embassy Tech Village. It is in 2 phases. Essentially, phase 1 went live about a month ago, and phase 2 has gone live this month. And from that standpoint, in case of these type of centers, since the occupancy is kind of happening almost 100% day one, the margins start rolling in from day one itself. I would not want to comment on specific margins, but yes, in these kinds of centers where it's a demand-led supply or a managed office kind of a scenario, then obviously from day one itself, we have the break-even happening. In case of centers where 100% is not taken up, usually what we do is we set up portion of the center as a co-working center, and a large portion in case, for example, in case of Howden in Supreme Business Park, 65% is taken up with Howden. Rest of it is we are running as a co-working center, which because obviously we have limited occupancy to fill, only about 35%, it'll fill up in the next 2-3 months. So that's both centers. The margin profile looks really good from day one.
Okay, we take that point. Amit, this is about the existing portfolio that you have in terms of the innovation center. I just want to understand how often, because now IT seems to be the one which is seeing some demand pressure, but GCC is what everyone's talking about in terms of the growth vertical for most of these, your companies from your sector as well. How often can you increase rentals here, and generally for the other parts of the portfolio as well?
So in case of the overall, be it GCCs or our overall portfolio, we typically have 5 to 7% escalation built on a year-on-year basis. Typically on our supply side, the increment is typically between 4 to 5% every year, or 15% every 3 years, right? Which translates to about 4.6%. And this is typically on the base rental, wherein our increase is on the complete services that we are offering. So the GCC clients or our regular clients, they all mimic the similar kind of structure in terms of increment in terms of margins.
Amit, you are also increasing presence in tier 2 cities. It's now grown by around 25%. What are the current number of seats here in tier 2 cities, and what are your expansion plans here? Which segments that you are targeting?
So 90% of the portfolio is tier 1 cities. 10% of the portfolio today of the total roughly 160,000 seats that we have clarity on So almost about 16, 17,000 seats are in tier 2 cities, and rest of it is in tier 1 cities. As far as the expansion goes, the next new city for us is going to be Vijayawada. We are already in 18 cities, so this will be the 19th city. Post that, we are looking at a few other cities as well on a case-by-case basis, but roughly about 20 odd cities by end of this year is what our target would be.
Amit, what is the size of the mobility vertical currently? How do you plan to scale it up? Any monetization plans here?
Yeah, so the mobility vertical, I think, just to give you a perspective, about roughly a year back, we used to sell about 300 day passes, right, a month. Today, that number is touching almost 18,000 day passes a month, right? So I think from that standpoint, mobility, as a business for us has grown tremendously, especially across day passes, meeting rooms, and virtual offices. This is obviously based on the network, right? We have close to about 235 odd locations that are live today. And those provide these opportunities across seats, meeting rooms, as well as virtual office type solutions. We feel that the business, which probably does about roughly 2 odd crores monthly for us, has the potential to go to about 5 to 6 crores in the next few years.
Now, what about allied services, Amit? How much of your revenue is that? You mentioned that the expansion in margins also comes from there. So, how much higher are the yields in this segment compared to the others?
So, allied services, basically last year we did about 11% of the overall revenue came from allied services. This year the target is to get to about somewhere around 14-15%. And I think that's where we would like it to stabilize. The margin profile obviously is higher because many of the services come with 100% margin, such as a meeting room seat being used. So from that standpoint, I think we feel that, clearly about a 15% is achievable for this year.
Take that point, Amit. Thank you so much for joining in today with your insights and the outlook for the business going forward. That's the word coming in from Awfis Space Solutions. But time for a short break now. We'll get you more on the markets on the other side.